My name is Greg Liller. I'm the Chief Operating Officer and Executive Chairman of Sierra Madre Gold and Silver.
Greg, good to meet you. We know the Sierra Madre team, but we've not met or spoken before. And I just wondered, can we just sort of kick off, give people a little bit of background on yourself? Where have you come from? What have you done?
I've been in the business, let's just put it this way, over 40 years. And I've been very fortunate in that 7 projects that I've been involved with in either a senior role or lead role have become mines. I've been working in Mexico since 1993, off and on. Had a nice success here with the Ocampo mine, which was sold to Frisco for $750 million after producing over 200,000 ounces of gold equivalent for 8 years. Lluvia de Oro is another mine I've built here. We restarted the El Cubo mine, basically took it out of bankruptcy and took that one from 2,000 ounces per month, gold equivalent ounces, to 7,000 by the time I left. So I've really had a lot of fun down here in Mexico.
Sounds like, and you're down there at the moment, but judging by the background, you're not at home.
I'm at the our newest project, the Guitarra Mine,
right,
which is located outside of Estado de Mexico, about 120 kilometers from Mexico City.
Right. Okay. Well, let's kind of get into this. What I'm trying to understand is, what you guys have set out to try to do. I mean, I think first things first is this is not new to you. You've been involved with this project before, haven't you?
Yeah, I was president of a company, Genco Resources. Is actually after getting Ocampo into production, I decided to retire. My retirement did not last very long. I got talked into coming down here to take a look at it. It was just kind of on a lark. I came down, and within about a day, I realized that this was much bigger than Ocampo. It's an entire mining district. So yeah, for 3 years, we conducted a very intensive exploration program. I think we drilled over 80,000 meters. Genco kind of blew up in the boardroom, and I left. Genco then merged with another company, and then they were bought out by First Majestic, and First Majestic operated it for 5 years, and then put it on care and maintenance. And they did a great job on care and maintenance. We've started up the mills, the ball mills. We've run rock through the crushers. The flotation plant just needs a little bit of plating work. Essentially, it's ready to go.
But okay, the first thing that people are going to be thinking there is, well, it's a company's put into care and maintenance. Why? Was it a question of just commodity prices, or was there something more fundamental?
No, First Majestic purchased a mine, San Dimas Tayoltita, which is one of the biggest gold silver mines in Mexico. It produces in a month what Guitarra was producing in a year. So they First Majestic decided to shut down their 4 smallest mines to focus all their capital on San Dimas. So,
right, okay.
It was making money at the time. It was making money, but it just wasn't
not core. Not core.
Didn't move the speedometer up for it.
Yeah, okay. It doesn't move the needle. Doesn't move the needle. I wonder how they feel about that now. Okay. You've got these 3 projects. You got La Guitarra, you got Tepac, and you got La Tigra. Just in terms of you talk about district-wide plays, and I always say this about small companies. You're sort of just above 100 million market cap. District-wide opportunities can be an asset, it can be a liability, because you got to spend money to develop these things out. So what's your plan? What are you focusing on first?
We're focusing on getting it back into production. I've been
Which
down...
one, La Guitarra?
Yes.
Right. Yeah. Okay. So what do we need to know today? What's it got today in terms of data? What's it in terms of infrastructure?
Oh, we've got over 1,400 drill holes now. The mine's all ready to go. I mean, it was in production. The stopes were in production when it was shut down, so we can go back into those same stopes, bring them into production. My ideas with Genco kind of revolved around some bulk tonnage ideas. And we actually did a feasibility study with very positive results for 4 open pits at the Guitarra Mine itself. Now we're looking at going back to those same deposits that were defined in that feasibility study and looking at modeling it up for mining them underground. It's probably cheaper to mine these things underground using long hole now than it is to do an open pit.
Okay, so bulk tonnage, but underground because you've got the benefit of the stopes being there. I guess it kind of keeps the costs down. So again, in terms of just that question around what existing data have you got that is going to help form this plan of yours, and how you go about allocating capital carefully and the order of play, as it were. So how does this play out for you?
Well, the database is all there to restart. In fact, I kept my old database. Several people that worked with me during the Genco days have gone with me from project to project. They've all come back. Some other people in other positions have come back, community relations. So it's kind of like taking the team we inherited from First Majestic, which are very competent geologic staff. We've got the mining, we've got some underground miners now. We've got the plant guys. We've made inquiries, and a lot of people that were laid off are all willing to come back. So we can get the thing started up in short order. I'm shooting for a year to 18 months to start up production. And then once we start production, we'll incrementally bring it along. There's 3 ball mills now that are fully functional. That gives us around 350 tons a day capacity. There's a 4th one that needs some work. We've got all the parts on site to get that done. So we'll bring it up 300 tons a day, then get it up to 500 tons a day. At that point, when everything's running smoothly, we'll purchase another ball mill, either 250 or 500. But if 500, that'll give us the capacity to move up to 1,000. At that point, we'll need some mill expansion, but there's plenty of room for that. But to get started is minimal. I mean, we have everything we need to get started, including the mining equipment. It turns out that a lot of the stuff in what I call the boneyard can be rebuilt. We've now hired a chief mechanic who also worked here during the Genco days. And he's assembling a crew, and we're putting together, rebuilding 4 scoops, 3 scoops really, maintenance on 2 others. We've got 2 jumbo drills. We've got all the jackleg drills we need in the warehouse. I mean, everything's here to get started in short order. It's just now a matter of pulling it together, getting a new resource study done. And from that, then we'll get a concise mine plan developed, and then we'll be able to commence construction.
Okay, so there's a bunch of stuff there. Let's just start with this. I think you've got a fully permitted mine for 500 tons a day. You're talking about 350 initially, ramping up to 5.
Yes.
You've got to feed that, and we'll talk about that in a second. In terms of open pit underground, to get that up to 1,000 ton a day mill, which would be bare minimum for you in terms of where you want to be. 500 is not huge, but what does that kind of look like in terms of the capital expenditure or OpEx? Because obviously a lot of it's already there for you to get to the point where it can start throwing out cash, because that's effectively what it does. It doesn't sound too expensive in terms of what you're going to need to throw at that to kind of get it up to 1,000 tons per day. No.
In fact, it'll be throwing out cash at 300 tons a day.
Yeah.
And so, we could hopefully purchase the ball mill out of cash flow, and perhaps do the mill expansion also out of cash flow. So capital investment on this thing is it's minimal.
Interesting.
And we've got a fully permitted, there's the old tailings. We can continue depositing tailings there. But First Majestic permitted an area. It's, again, fully permitted for dry stack tailings, and I believe it's got a capacity of, I want to say 5.8 million tons in the, so I mean, that's a lot of tonnage. 1,000 tons a day will take you a while to fill that up. But First Majestic had, they hadn't totally done nothing during that care and maintenance period. I mean, they did that, they permitted that new tailings impoundment. So
right, okay. So okay. Well, it really does sound like a very simple restart story in the sense that there's not a lot of capex, not a lot of money to kind of get through to a kind of cash flowing situation, and then you'll ramp that up, but be self-funding rather than dipping into the market, or any other kind of, well, or debt or whatever the options would be for you. So there's a sort of time frame between now and a mine plan which you can then execute. You talked about resource update. Again, what's the resource on this now? What do you know in terms of the tonnage and the grade, and what would this new updated resource look like?
I think First Majestic was carrying 7 million equivalent silver ounces in measured and indicated, and around 10 more in inferred. So no, I've again, that didn't include any of this bulk tonnage stuff that I'm talking about. Didn't include a lot of the potential here at the Guitarra Mine itself. It was centered over at the Coloso Nazareno mines. So no, I'm out, but I'm looking at for a big increase over what First Majestic had.
Right. Okay. Well, that's where I was going in terms of what additional data you would layer into any new resource to give us a sense of how you're going to come at this, because you talked about open pit, you talked about bulk tonnage underground. Is it a case of those things, come together, or do you prefer the bulk underground versus the open pit? I mean, how do you feed the mill, I guess is where I'm going.
Well, yeah, well, all the data is there for the bulk tonnage. The stuff with Genco, the pits were very high strip ratio, 8-to-1. So you got to move 9 tons of rock to get 1 ton into the mill. Right now, I think realistically, open pit prices are somewhere between $250 and $3 a ton.
Mm-hmm.
So if it's $3 a ton, there's $27 in mining costs alone.
Yeah,
on the open pit, and you can long hole mine underground much cheaper than that. And we've got 2 of the open pit deposits that have very, very cohesive, tight, high grade cores to them. So we'll be focusing on those. But all the data is there. We get we're shooting for around 6 months to get a new resource number out. Once we get that out, we'll have the models and everything that we need to develop a mine plan around. And the mine plan is going to be very simple, because Guitarra already has tens and tens of kilometers worth of underground workings. All the development's been done. We'll have to do a little bit, but it's not like you're developing a mine from scratch. And I mean, we don't have to put $5 million into doing a feasibility study just to get this thing started. It's all there already. So all we need to do is get a resource update, get a nice 2-year mine plan around what we've got there, and we're ready to go. We've got the mining equipment, needs some rebuild work, rebuilding basically 3 scoops, 2 jumbos. We've got, I don't know how many jack legs. We've got all the small stuff in place. The compressors are there. All the electric substations are all there. They took a lot of the wiring out of the mine, the high voltage cables. That's all stored in the warehouses. So I think this is just there's not many opportunities like this around in the business right now.
It's a true restart. It's okay. So I think the thing to be clear about, I want to be clear about before I leave this conversation, is you're not going to go down some economic study process here. You know enough to move into getting a mine plan done and then starting the process of trying to get this thing into production, right? We're talking how quickly between now and when would you start putting stuff through that mill as it currently stands?
I'm shooting for a year to 18 months for full startup. And as far as the getting the economics behind it, we've got 5 years of detailed production records, accounting records. I mean, we know how much it costs to run this place. It's all there. So it's like I said, we're saying it's hard to get a feasibility study done for less than $5 million anymore. And all the drilling's taken place. We've got over 1,400 drill holes. So you don't need a whole lot of that sort of work done to get it started up. Then once we start up, yes, then we'll start doing some exploration work, and that'll focus on the East District.
Right. Okay. So just in your mind, or in the mind of the board, you're saying there's no risk associated with not doing some kind of study around this because we've got all the information we need, and the previous team who ran this thing are the people who are going to be doing it. Is that right? I'm just trying to go, what's your risk assessment on this?
Compared to most every other project, it's very low risk. I mean, the mill's already built. The processing plant's already built. The underground mine's already developed. We've got the production records and the costs associated with that from 2012, 2013 until 2018. The only thing that's going to change is the cost of the materials. We get bids on that, and we already have a contract in place with the syndicatos, the mining union. So we know what those costs are going to be. It's not like we're trying to guesstimate costs. I mean, even if in a feasibility study, it's still a guesstimate. So no, we've got hard numbers for all this stuff. So yeah, it's compared to other mines starting from scratch, this is a low risk proposition.
Right. Okay. So coming back to the question of where's the ore that is going to feed the mill going to come from initially, and what does that ramp up to look like over the next 2-3 years? How are you picturing this? Because the mill is where the mill is, so you don't need to work out the best place for it. It's a case of what's the most efficient way of getting ore into that mill so we make sure the margins remain good.
Well, the Guitarra Mine itself is right next to the mill, obviously. So the plan is to get high-grade stopes that were just shut down. We can go back into those, restart those stopes. We've got the drilling to see where we need development, where we can develop additional high-grade stopes. So we've got the ones in production, ones to be developed, the high-grade. You've got the bulk tonnage, the two bulk tonnage deposits. Those will, you want to blend those two so you get a nice economic grade going to the mill. We've got the Colosso mine, which is about 3.4 kilometers away. And we can get that back into production. And what they were doing there was they were hauling over to the Guitarra area and then dropping it down raises, ore chutes, and picking it up on the main haulage levels and taking it to the mill. And again, we've got all the costs associated with that. So we can get the high-grade stuff going back at the Colosso and Nazareno mines. We got the high-grade in the Guitarra. We got the Guitarra bulk tonnage. And actually over in the Eastern District with Genco, we had started a development ramp down on one of the deposits that we'd found over there. We're actually taking development ore in the Genco days out of that, so we can go back into that. And First Majestics actually purchased, I think it's like 34 hectares there, something like that, and completed a feasibility study that was signed off on to develop another production center there. So again, that one's fully permitted. The mines, Guitarra, Colosso, those are all fully permitted. Processing plants fully permitted. During that closure period, First Majestic permitted a 5.8 million ton dry stack tailings facility adjacent to the plant or just down the hill from the plant. So we've got that that's done. And permitting is always a risk that people don't take into account. But we've got our permits.
Yeah, no, that's a big deal. I appreciate it. Okay, I'm building up a sense of where all these kind of mine centers can be in, I guess, the order of play, in terms of like feeding the mill. You just raised $10.3 million. To do what? Yeah, how's that being allocated? You got to be efficient with this stuff. So where's it going first, and what's it going to do for you?
We're focusing on getting everything up and running again. We do have some rebuild on some of the old mining equipment that's here, but we don't have to order new equipment for the scoops, the jumbos. All those things have a year or two lead time right now. We've already hired a chief mechanic who worked on this equipment before, back when it was in production. He's come on board. He's bringing a couple other of the mechanics that were on site. They're coming on. We're basically going to be using the workforce that First Majestic had, because a lot of them have stayed in the area. The men are commuting elsewhere for work, but their families are still here in the area. And a lot of people have indicated a real desire to come back. They can be with their families. It's a decent paying job. It's better than what they're getting now. So the workforce is there. All the tools, equipment, plants are there. It's not going to take $20 million to get back into production. I don't think it's going to take $10 million. I'm hoping that we can get it done for significantly less than 10.
Okay, so you laid it out simply. You're absolutely laser focused on getting this thing back into production. You're financed to be able to do that. You've indicated that the hope is that the mill will actually be able to self-finance the kind of growth component. There are a couple of other things. Obviously the tailings opportunity. It's fairly low grade stuff. But do you see value in getting stuck into that anytime soon? What would the CapEx be required to be able to monetize that?
We've already started gathering the bits and pieces to apply for a permit for leaching, Merrill-Crowe leaching circuit. Assuming we get the permits for that, then we've got over 2 million tons of material that's grading a little over an ounce per ton silver and half a gram gold. And with cyanide leaching, you can recover at least 80% of the gold and 70% of the silver. I've got all of my old metallurgical testing that I did with Genco through a third party. I've kept all that data. I think we can do significantly better than that, but even if you can only get 80 and 70, it's still quite attractive, because all you're doing is scooping up sand, you'll put it back through the mill just to churn it up and grind it up a little bit more, but it's already crushed. So that whole commutation part of it, the crushing and grinding, is the most expensive part of any processing plant. That's already paid for. So it's just the leaching. And if we bring that into line, we'll also be doing it with the whole ore, and then our recoveries go up significantly. It could be, the test work indicates 72% silver recovery and over 90% gold recovery on the whole rock, the ore itself. You can probably do better than that if you boost up the cyanide levels a little bit. But that would significantly improve profitability. It still makes money with flotation, but I wouldn't put the tailings through until we had a leaching circuit. I mean, if you didn't get it the first time with a process, why do you think you're going to get it the second time? I mean, I've seen a lot of people do that. It's just like, come on, guy, to explain this to me. How come you didn't get it the first time and you get it the second time using the exact same methods? It doesn't make sense.
It's even it's even unbelievable when people talk about having new technologies which will work this time. Right. We all heard it. We all heard it. The other bit. Okay, we're laser focused on getting into production. Laser focused on producing cash. Does that mean that you? And I guess you could ask this question in the context and the backdrop of today's market, where drilling doesn't seem to be getting the response that it maybe once did, or certainly the value add that it once did. Do you park up any exploration for now and get the whole team focused on production, or is there going to be some exploration components to this?
No, for right now we're focused on production. Once we're in production, we'll use cash flow. The Temiscaltepec district was one of the 6 most important districts in colonial Mexico. I mean, it was right up there with Guanajuato and Zacatecas. And it's just been ignored. That was what attracted me to Guitarra to begin with, was the potential of the Temiscaltepec district as a whole. And we have mining concessions that cover the entire district. And with Genco, we had only put about, I think it was 40 some odd holes over in the eastern portion of the district. And there were some real jewels over there. There was one mine, El Rincon, that operated from in the early 1900s to 1934. But its average grade was 6.6 grams gold and 800 and some odd grams silver. So, I mean, that's the kind of prize we're going to be looking for with the exploration in the Eastern District. So,
right. Okay. Something to come, something to look forward to. Bit of blue sky for us. Right now, focused on the money. Let's just talk about the share register. Obviously, First Majestic are, as a consequence, the single largest shareholder, just under 48% of the company. You've got some resale restrictions on them, but effectively 25% every 6 months over a 2-year period. Are you concerned about that? Do you think that's going to affect us a fair thing, fair deal that you've done for them, fair deal for you and any new shareholders that you've got?
Well, they were the ones that wanted an all-share deal. That was their idea. And what they plan on doing is dividending
the excess.
Excess out and then coming down to 19.9. So
That's right.
That'll give our really expand our shareholder base. I mean, we'll go.
Yeah, I think the sale of excess to existing shareholders, obviously unrestricted, is not bad. It's a nice way of getting more shareholders into this thing. So 19.9, do they get a seat on the board, or are they letting you get on with it?
No, right now they're happy with the arrangement as is. I think they've even agreed to go along with our management decisions for 2 years.
Okay.
But they haven't asked for a board seat. So
interesting. Okay. Well, look, I think in terms of the first pass, that's a really good overview for people, and I want people to kind of hear the story. So we're big fans of the model, and I say not too many companies get us to start in this position. So it's now down to just purely about execution for you. You've got the capital, you just need to execute. So I tell you what, Rick, Greg, thanks very much for coming on the show, but do stay in touch with us and let us know how you get on, okay?
Will do, Matt. Thank you for having us. Appreciate it.